Stavros Tousios for M4Markets. We're going to close the week with pound and also gold. We have seen pound, of course, breaking above 126.79 early in the week, or maybe even it happened yesterday. We had a false break on Wednesday, then we've soared higher. But importantly, at the same time, we also re-entered the ascending trend that started back in September of 2022. We remain above that high for now. And importantly, a much more important swing high around 125. This tells us, because of course we do have momentum converging with prices for the moment, that we could see further upside towards 130. However, if we look at the latest leg to the upside over here, we can also find resistance at 128.38, 129.82 and 131.65. Now, without having a divergence, we could be looking for a 5-wave move to the upside over here, which means this would be perhaps the third. We might get a consolidation, and then around 128.40 could be a level that we can eye on, at least for intraday price action. Now, the ideal scenario would be here for any sort of extension to be able to provide some sort of divergence with momentum, something like this. When and if we see the RSI diverging from prices, we can start looking for other indications of a potential correction or reversal. But until then, and I know this remains in overbought territory, this with little indications to the downside, it has more potential to either stay sideways or move higher when we are, of course, considering the probabilities here. Now, when we look at gold, we talked about that triangle quite a few times. And by the way that markets moved, and this being, of course, the last wave of the triangle, this move to the downside seems that it has finished the downward trend, if that is like even a short-term trend. Why? Well, because, guys, if this is indeed the end of the triangle and prices came all the way back up and fully reversed that, it means that now it will be hard for that to go back down to continue that leg as an extended leg towards the 1906, unless this would be considered as some sort of flat pattern, which means we could head back to around 1985 or so, and from there do one more leg to the downside. That would invalidate the triangle though. But sometimes structures can be deceiving, okay? So the assumption here is that this plays out, means that we might be due a correction and then further continuation to the downside, which means this is a 5-wave move to the downside. We see 3-wave correction and then further downside. Or maybe this was a part of a flat pattern move. We are going to continue higher from here, okay? Completely higher. And of course, as I just said, if not a triangle, or if we move lower down from here, even where we are now, that would suggest that this would be kind of some sort of flat pattern, and we should be looking for the break of the previous low, of course, taking us down to around the 1906, which is the golden pocket. The RSI does not really show much. Apart from that last signal to the downside, there is some flatness on the RSI here, and as we evidently see, of course, prices came down and they swept that low. On a more of a medium-term sort of perspective, though, from down here all the way up here, there is evident divergence. The question is whether we are considering that divergence as a good signal or not. So it is important for further continuation to the upside that we manage to re-enter the upside trend. Pound has done it. Gold, not yet.